Today, I'll be going over the concept of AMD, also known as power of three, which is accumulation, manipulation, and distribution, and talking about why this is one of the most significant and important trading concepts that you can learn. To understand power of three, you must first understand what each individual word means. To start off, we have the A, which is for accumulation. Accumulation is when the market moves sideways, generating low resistance liquidity on both the buy side and the sell side. An on-chart example could be this right here. We see the market generating low resistance at the buy side and the market generating an abundance of low resistance at the sell side. This is accumulation. A second letter is M, which stands for manipulation. Manipulation is when price sweeps out either the buy side or the sell side of the accumulation range and then also distributes inside of a high time frame key level. Here we have an on-chart example of manipulation. We see price accumulate, price then comes up, manipulating out the buy side of the accumulation. And here we have an example for the sell side where we see price accumulate and then price comes down, manipulating out the sell side of this accumulating range. Finally, D stands for distribution. Distribution is when price moves with volume towards your DOL after sweeping out the buy side or the sell side of the accumulating range and displacing into a high time frame key level. However, there's one small thing you must look for before expecting distribution in price. After manipulation, you must always see some sort of low time frame confirmation confirming that price is about to distribute. This confirmation could be through an IFEG on the lower time frame or a CISD on the lower time frame. Here we have a perfect example of distribution. We see price accumulate. Price then comes down, sweeping out the sell side of that accumulating range and manipulating inside of a 30-minute fair value gap. From there, we get a 1-minute inversion confirming our distribution towards the upside. Price then swiftly delivers towards the upside. However, understanding AMD is only half of what you need to know to understand PO3. Before effectively using the PO3 model, you must first add time to your AMD. An example of adding time to AMD is right here. We see price accumulate and then 10 a.m. candle opening up, manipulates above the buy side of this accumulating range, and then we get our distribution. The reason this is so important is because when high time frame candles open, they tend to print wicks. After putting in the wick, these high time frame candles tend to distribute in the direction of your AMD. This makes for not only an extremely protected stop loss, but an extremely high probability trade. Now, the key candle openings that you should be looking for are the New York AM 9:30, 9:45, 10 a.m., 10:15, and 10:30 a.m. candles. And in Asia, you're looking for the 8 p.m., the 8:15, 8:30, 9, 9:15, and 9:30 p.m. candles. Now, one thing you should keep in mind while looking for these key candle openings is that every session opening candle and every hourly interval is a much more significant candle than these 15-minute and 30-minute opens. The reasoning behind that is because these are higher time frame candle openings than the 15-minute candles, meaning that the wick they print is more protected and more significant on the higher time frame. Now, since you understand these key candle openings, let me show you a on-chart example of a trade just from last week, incorporating AMD and time. Here, we have a trade from Asia session just last week. Here, before our 8 p.m. open, we see price accumulating, generating low resistance towards the buy side and the sell side with a 30-minute gap down below. We then have our 8 p.m. open, sweeping out the sell side of this accumulating range and mitigating this 30-minute gap. After seeing our 8 p.m. manipulation, we then identify this 1-minute fair value gap as our condition to confirm distribution towards this buy side liquidity above. We then get a 1-minute IFEG confirming distribution towards the buy side liquidity above. After getting the confirmation of distribution, we then enter our trade, putting our stop loss below this protected low, also being the 8 p.m. wick, and running our take profit to a 1-to-1. From here, price distributes up, hitting our take profit. This is exactly how you use the power of three model paired with time. If you watch the whole video, join the free Discord link in the description of this video. Amazing community in there, live in VC all the time, trading New York AM session, and thank you for watching.